Um, I do think that as we work our way through this short-term crisis, which is really revolving around credit availability and the seizing up of credit and the seizing up of the banks being willing to lend money both to each other and to other people, we shouldn't lose focus on the longer-term issues that will ensure the growth of the U.S. economy, the growth of our companies, and the competitiveness of the U.S. economy. And I'm really worried about the longer-term issues. The venture capital industry has financed companies which have been the job-creating engine of the U.S. economy. Venture-backed companies funded since 1970 today employ over 10 million Americans, 2.5 million right here in California, but that's 10% of the U.S. workforce on a very small amount of invested capital. And I do think we need to think long-term about what can we do to restore the U.S. advantage in capital markets and the availability of growth capital for these young, successful companies that are trying to get to the next stage. So in that regard, I hope that the cure here isn't worse than the disease. If the cure is going to be more regulation in the context of the credit worries, I hope it's not more regulation that stifles innovation and stifles young companies. We have a situation where the NASDAQ, even before the crisis, was not functioning well, in part because of Sarbanes-Oxley increasing the cost to new issuers, including very small companies, by a very large amount, in part because of the equity research settlement and the decimalization of the NASDAQ and Reg FD, which really destroyed the economics of NASDAQ market making and equity research. And the U.S. capital markets are becoming less competitive, and that's a serious issue for job creation and for the success of the venture capital industry. Now, individual general partners like Carlyle, we're going to alter our model to the circumstances at hand. We frankly, for the last number of years, have been investing around what I would call a growth equity strategy. We've been doing less and less early stage venture capital and more expansion of growth equity financings, in part to lower our loss ratio, in part recognizing that the overwhelming majority of our exits were going to be through M&A transactions to larger companies and not through the IPO market. So you don't have as many chances, as many at-bats to create those 10-time or 100-time timers that cover your sins for all the companies that went to zero. So if you look in our last portfolio, our last fund from the 01-02 time period, we've written off less than 10% of the companies in that fund, only 2 write-offs out of 36 companies. I think individual general partners will do their job and figure out how to make their limited partners money in a world in which most of your exits are M&A. But I think as a long-term fix, the U.S. really needs to think hard about the building blocks for competitiveness. And I would say they are healthy capital markets that do allow young companies to come public and access capital. I think investment in university research and in K-12 education. And again, let's not spend all our money in entitlements and compromise our ability to make those investments. I think it's frankly accessing the best talent in the world. I hope that the politicians, when they get through the credit crisis, will return to the topic of increasing the number of H-1B visas in this country to let talented engineers and scientists stay here. And frankly, I think it's an embrace of free trade in the world, of open markets and goods, services, capital, people, ideas. Technology companies here in Silicon Valley are big exporters. The tech industry has grown tremendously in part because of its integration with the world economy. And I think if we get into a world where we adopt a more protectionist approach, that will really hurt the young, innovative companies here in the United States that are making world-changing products that are going to be demanded all over the world and therefore be exported. So while we focus on the short-term credit crisis, I hope we also can, at some point, and hope maybe the new president, whichever it is, whether it's Senator Obama or Senator McCain, will turn their attention to U.S. competitiveness and job creation and growth in the long term once they're elected.